Don, thank you for speaking to us about hedge fund trends today. Which investment strategies are allocators piling into and why?
Well, I think one of the big issues on investors' minds today is valuation of the capital markets. We've seen tremendous rally in fixed income over the past 5 years. We've seen the equity markets go up. One strategy that still has a lot of beta that investors are still interested in is activist managers. And the main reason is they think it's not completely dependent on the market. They think the activist can cause a catalyst to create value that typically doesn't exist. Most of the other strategies are trying to reduce risk in the portfolio. We're seeing a big increase in direct lending type funds. Most of the spreads have tightened significantly, but for direct lending, where banks aren't lending anymore to small, mid-sized companies, lenders can get pretty significant yield spreads over treasury bonds. We're also seeing greater interest in market-neutral equity strategies. There's been very little demand in market-neutral equity since 2008 because people had a lot of difficulty generating returns on the short side. Alpha on both the long and short side is beginning to come back. We're seeing demand for long-short equity, not very long-biased long-short equity, but managers with a 40 to 60 net exposure. And we're also seeing interest for relative value fixed income.
Which investment strategies are allocators exiting and why?
We're beginning to see people lighten up on structured credit. A lot of investors did very, very well over the past few years as interest rates came down, spreads tightened, and they significantly increased their allocation to structured credit. So I think going forward, people are always going to have an allocation to structured credit. It's just going to be smaller than what they've had over the past few years. You're also beginning to see some people take money out of distressed debt. Again, a very similar situation. You've had great returns, and people are afraid that going forward, the returns are not going to be as good as they had been historically. Finally, you've seen a lot of money come out of CTAs over the past couple of years. You've seen a little bit of increase in the demand for CTAs because of the great returns they had last year. But this recent sell-off on CTAs have dampened some people's enthusiasms. Probably a good time to actually consider allocating to CTAs because of the uncorrelated aspect of that strategy.
What are the top investor trends you see developing over the course of 2015 and why?
I think one of the big trends is going to be investing in longer lockup funds. After 2008, people wanted monthly liquidity, people didn't want gates, they wanted to get their money. The problem is, most of the very liquid strategies are expensive today. The highly liquid securities are trading at very, very high valuations. And if you really want to go after inefficiencies in the marketplace, you need to focus on those securities that need longer lockups. So I think you're going to see funds coming out with 1, 2, 3 year lockups, and I think you're going to want investors asking for these longer lockup funds because of the potential higher return they can generate.